Hi, everybody. Welcome again to this webinar. My name is Carlos Palma. I am a product manager for dLocal. And with me today, we have Adebiyi Aromolaran. He's the head of expansion in Africa for dLocal. And we'll be covering this webinar, which is about mobile money and embracing an untapped market in Africa. So for today's agenda, I'm going to start with a brief introduction to dLocal for those of you who are not familiar with our company. And then I'm going to move over to cover mobile money, to just do a quick overview of what the payment method is, tell a quick story of one of the most popular mobile money providers in Africa, and also cover what can users do with mobile money as a payment method, and cover the growth of mobile money in Sub-Saharan Africa. Then I'm going to hand over the presentation to Adebiyi, who's going to go into more specifics about the markets where dLocal has coverage of mobile money. He's also going to show some examples of different flows for the different markets. And if time allows, we're going to have a Q&A session at the end of this presentation. So for any of you who might have any questions during the presentation, you can post them using the message, the questions in the tool. Okay, so for a quick introduction to our company, we process both pay-ins and payouts locally in emerging markets in a total of 26 different currencies, while settling with our merchants in euros, US dollars, a local currency in the markets where we operate. We give our merchants a single API, and through this API, our merchants can access more than 300 local payment methods in emerging markets in the Latin America, Asia Pacific, and EMEA regions, targeting a total of 2.3 billion customers in these markets. We provide both pay-ins and payout solutions to more than 450 merchants, which includes some of the world's biggest innovators, such as the companies that you see in this slide. So why do our customers work with dLocal? Mainly because we provide them with a simple and fast way to enter new markets without them having to set up local entities using dLocal as a merchant of record. Our merchants can start processing with local payment methods, which of course maximizes their reach and improves their checkout completions. We also provide automated fund repatriation to the US, Europe, China, and all of our local markets. And we provide a secure enterprise class platform with a single API access for all of the features, all of the different payment methods that we cover. So let's go into the core of this presentation, which is about mobile money. And mobile money is all about accessing millions of consumers in Africa with the most popular digital payment method. Mobile money has been very successful in bringing unbanked users into the mainstream and allowing them to pay for products and services, and also send balance to the peers using a very simple but very effective digital technology to achieve these goals. The mobile money phenomenon was driven mostly by the local telcos that allowed this technology to reach all the users that were forgotten by the traditional banking system. So just to cover a quick overview of mobile money is a service that stores funds in an account that's linked to a mobile phone number. This service was primarily implemented and driven by telcos, telecommunications companies in Africa, using very simple technology, which is based on SMS as the underlying communication channel, and SIM Toolkit, which is a very basic standard that allows developers to write basic applications that extend the functionality of mobile phones. Combined, these two tools allow money transfers using low-cost phones, which includes both smartphones and regular cell phones. And most importantly, this technology works in areas where there's no internet coverage. So internet is not required to transact with mobile money, since the communication channel is SMS, and SMS is supported through regular cell phone connection. Another important point about mobile money is that the successful implementations all counted with a large network of agents that make it easy to fund and withdraw from accounts. Of course, generating this large network of agents required a very large upfront investment, but given the market conditions, this was done very effectively in Africa and allowed this technology to eventually become viral and expand, and has nowadays reached a very significant volume and market penetration. So to illustrate this, I'm just going to focus on the M-Pesa story. M-Pesa is the most popular mobile money payment method in Kenya. It was launched in 2007 in Kenya by Safaricom. Safaricom is partially owned by Vodafone in the UK. So the idea was initially thought by Vodafone in the UK. They did some trial runs in 2006 and launched fully in 2007. Their primary value proposition was send money by phone, which was a message that really resonated with the Kenyan population, since at the time the Kenyans who were living in the cities and earning money in the cities had a very difficult time sending that money abroad to family members, to their parents. So this message was really what captured the imagination of the population at the time. To illustrate how quickly this was caught by the population, the platform launched in 2007 with 0 users, and in just 1 year, they managed to get a total of 2 million users signed up. So how did M-Pesa, how did Safaricom achieve this? The Safaricom was very successful in implemented the cash in, cash out distribution network. This is the network that's required to actually fund the accounts and withdraw money from the accounts. So of course, Safaricom realized that in order to make this a successful payment method, users needed to be able to easily create accounts and easily store, fund these accounts and withdraw money from these accounts. So the network needed to be very well distributed and very convenient to these users. So in effect, what they did in launch was that for any new agent, any new entrepreneur who wanted to join this initiative, they needed to set up at least agents in at least 3 different counties. So if they wanted to set up an agent in the capital, they could do so long as they also had agents in other counties in the country. So this allowed Safaricom to get a countrywide reach very quickly. So to illustrate this, by 2012, more than 30,000 agents were signed up. Currently, the agent to bank rate is about 60 to 1. So of course, you can imagine that with 60 agents per bank, this is a much more convenient payment method than using traditional banking. In 2018, M-Pesa transactions accounted for almost 50% of Kenya's GDP. And in this year, M-Pesa had already expanded to 10 different countries. So just to show you what an agent looks like, we have a picture on the right-hand side. These are the agent stores where people could very easily fund the accounts and withdraw money from the mobile phone accounts. So what can users do with mobile money? So of course, I mentioned the cash deposits and withdrawals in agent outlets, but in terms of deposits, users can also deposit money and fund an account using their credit and debit cards, and also using bank transfers. They might also be able to receive cash back from merchants. Merchants can use this technology to give cashbacks to their customers, and also to fund their suppliers as well. And of course, users can receive payments via P2P payments. Finally, once a user has a balance available in their account, they can use that balance to pay for merchant services and products in a wide range of sectors. So, for example, they can use this balance to pay for groceries, pay for restaurant bills, and even pay for newspapers in the streets. Because nowadays, pretty much every merchant has the ability to accept mobile money as a payment method. Users can also pay for gas and pay for utility bills. They can use mobile money to withdraw from ATM machines where these are available. And of course, very interesting for us, they can use mobile money to pay for online products and services. Of course, they can use mobile money to do P2P payments and pay for airtime, which are one of the core functionalities that were released when mobile money was launched. So why did this become so popular? The main factor is that anyone with a mobile phone, and even with a very simple cell phone, can have a mobile money account. There's no bank account needed to open a mobile money account. All that's required is that the customer go to their Safaricom agent, and when they're signing up for a SIM card, they can opt into a mobile money account by just providing some very basic information. So they just provide their name and last name, their addresses. So for address and postal address, they provide their ID with photo identification, and they provide their date of birth. And that's all that's needed to open up a mobile money account. Once the information is validated by the company, the user can start receiving, sending, and spending money instantly from their mobile money account. So as I mentioned before, there are 60 mobile money agent outlets for every single bank branch. If we compare that to bank branches and ATMs, that will be about 20 to 1. So the ratio is still really high. And what this ratio means is not only convenience for users living in cities, but also, and most importantly, it means coverage throughout the country, especially in towns that didn't have access to an ATM or to a bank branch. Now they can count with one or more mobile money agents where they can cash in and cash out of their accounts. Another important point is that there are no monthly opening or deposit fees. The fees are charged just for withdrawals and transfers between accounts, and the fees are minimal, especially if we compare them to banking transfers. So transfers using from different bank accounts. In some cases, in some countries, some mobile money companies have also implemented, especially given the COVID-19 situation, they've either withdrawn the transfer fees and withdrawal fees for very low accounts to incentivize the use of mobile money. Mobile money is also very popular because, of course, it can be used anywhere where there's a phone signal. Finally, it's considered a very secure payment method because there's no cash involved, especially for making peer-to-peer transactions. The funds are protected by local financial regulators, and a PIN is required for every single transaction. So every single transaction has the approval of the mobile money account holder. So just to cover the current situation of mobile money in Sub-Saharan Africa, this is a report from the GSMA group in 2019. So last year, there was a total of $456 billion exchanged through mobile money networks in Sub-Saharan Africa. In Kenya, 76% of Kenyans own a mobile money account, compared to only 6% of credit card holders. There were a total of 50 million new accounts, with a total of 24 billion transactions completed through mobile money networks, and an increase in the number of active accounts of 15%. So even though mobile money is a consolidated payment method in Africa, it is still showing healthy growth. So as the technology continues to improve and people continue to use mobile money, new capabilities are added. So for example, mobile money was initially used to make individual transactions, and it's increasingly being used as a store of value. So this allows companies to start adding some new features, such as allowing for credit, and even in some cases, and in the future, it's possible that some companies will start allowing for recurring payments as well. So globally, the transaction values are expected to continue to grow. In the last year, there were a total of 690 billion US dollars transacted through mobile money networks, and this is expected to grow up to 1 trillion in 2023. What this means is that now mobile money networks are processing close to 2 billion US dollars a day, and in just 3 years, this number will increase to 2.8 billion US dollars a day. So of course, this increased volume means that as mobile money becomes more ubiquitous with users, there will be higher levels of trust, and the payment method will become even more relevant for users who are comfortable using this payment method. So now I'm going to give the presentation over to Adebiyi, who's going to focus on the coverage for dLocal in the markets where we operate and offer mobile money as a payment method.
Hi, thanks, Carlos. All right, so yeah, I'll be taking us through our mobile money capabilities in some of the countries we cover in Africa, with specific focus on Kenya, Ghana, Senegal, and Cameroon. Kenya seems to be the birthplace of mobile money. I'm sure it's been trialed in several places up until M-Pesa caught fire. So it's just right we start from Kenya. In terms of market share in the financial services space, mobile money accounts for about 76% of what happens in amongst the populace of Kenya's, while bank accounts account for 55.7%. That's out of a population of 53 million people. The GDP of Kenya is roughly 95.5 billion, and we have $600 million done in e-commerce, 5 million e-shoppers, and internet penetration of 43%. These are just basic stats that give you a sense of what the capabilities are for mobile money in that market. Coming from its advent in 2006, 2007, up until now, 13 years later, it's become the dominant payment method in Kenya. Mobile money in Kenya is provided by two principal telcos. There's M-Pesa from Safaricom, and there's mobile money or Airtel money from Airtel, the service provider. Compared to what cards offer you in Kenya, cards are around just 5.7% in terms of credit card penetration, while debit cards account for 37.5% of the market. The interesting thing about mobile money is literally everyone has a mobile phone. Now discounting the internet penetration, don't forget Carlos mentioned that all you need is GSM signal, right? Because you can use a smartphone, you can use a dumb phone, depending on the kind of services you want to enjoy via mobile money. And these are services you can just get access to by dialing simple short codes on your phone. So the internet penetration really isn't an issue for mobile money. Again, it's built on the fact that it's a telephone-led payment method. In spite of the huge successes you have for mobile money in Kenya, cash is still king. This is similar story to what you find across Africa. Cash is still the dominant payment method when it comes to commerce. Although 9.2% of e-shoppers bought items online, 26% paid for something or paid bills online. Just to quickly differentiate between that. So when we're talking e-commerce, in terms of online payments, we'll separate it from bill payments. Bill payments would mean me buying airtime, paying for my utility bills or TV subscriptions, like local TV subscription. Whereas for e-commerce, we're looking at digital services purchased from online stores rather than mom and pop stores. In terms of the flow for mobile money, sorry, in terms of the market share rather, or distribution of payments in Kenya, what you find is that mobile money accounts for 33% of payments in Kenya. Cards accounts for 23%, while cash, as I mentioned, accounts for 44%. This is cash for payment for items being delivered to your doorstep. So as opposed to making payments online and those items just being delivered, some people still prefer to pay cash on delivery. So that's why you have cash accounting for 44% of e-commerce payments in Kenya. The predominant, or the dominant card schemes are Visa and MasterCard. That's not to say there aren't other card schemes, but they are in very negligible numbers. And of course, there's M-Pesa from Safaricom and Airtel Money from Airtel. In terms of flow, it's simple. Just like every normal payment system, if I went to a checkout button on a website, I would, for my card, for instance, I'll be required to input my card pan, my CVV, my expiry date, and any other information required for the card. It's the same. It's similar for mobile money, except in this case, the reference ID or the number required to facilitate that transaction is the phone number of the payer. And once I input my Safaricom or Airtel number, for instance, I get a push notification on my phone, and then I'm required to enter a PIN. Again, this is what breeds trust in a payment in a payment service. The fact that it's secure, it's convenient, it's fast. So I enter my PIN, 4 digits PIN or 6 digits PIN in for some telcos, and then that transaction is authenticated. The payment is real time, and value is instant. So it's instant value to the aggregator in some instances. So that's how mobile money works in Kenya. If you come down to Ghana, it's the same story. Out of a population of 30.4 million people, you will have 42.4% of the populace having accounts in financial institutions, while you have mobile money again being the dominant method of payment. Mobile money penetration in this case is 38.9%. However, the reality on ground is that it's catching on very quickly. The story here again is that banks are unable to service a lot of customers in the rural areas. These are areas where the telcos really don't need to set up additional infrastructure to provide services. To once I have a phone number and I have a phone, I have easy access to mobile money, and that's the reason mobile money is growing rapidly. So, as with Kenya, you have a GDP here of 67 billion against 95 in Kenya. E-commerce being stronger in Ghana, 800 million, 1.4 million e-shoppers, and a higher internet penetration rate. Looking at ratios, if you compare to the number of people, it's understandable why these figures will probably be higher. 4.2% of the e-shoppers bought something online, and 7.8% paid for bills online. Cards are also negligible in terms of activity in this market. Just 5.8% for credit cards and 18.6% for debit cards. One thing you'd notice across Africa is that credit cards aren't particularly common. They are particularly popular. You have more of debit cards. This also has to do with the financial systems and then the buying culture amongst Africans. So mobile money again presenting itself as a stronger alternative to bank-led payment systems such as cards or EFTs. In terms of distribution in Ghana, you can see mobile money here accounts for roughly 61% of what happens in the e-commerce space, with cash accounting for 16.2%. Cards account for 15.2% of the payments, while you have others 8.1%. In the case of others, you'd have systems like EFTs, that's electronic funds transfers. You have vouchers, you'll have wallets, and wallets are similar to mobile money schemes, except that in most cases they are not offered or operated by telcos. The common cards here also are Visa and MasterCard. And then in terms of mobile money options, you have about 4 providers: Vodafone, MTN, Tigo, and Airtel. All the major telco providers in Ghana pretty much offer mobile money services. There's also consistency to the flow of mobile money because coming from its inception in 2007, it's grown, it's been refined, and more features are being added to make it be at par with more internationally recognized payment systems. So in terms of flow, it's almost standard to what you expect or what you see from the demonstration of Kenya. It's the same thing. You provide your phone number, you get push notification to your phone, you authenticate, authorize it to your PIN, and then that transaction is instantly consummated between the buyer and the merchant. Um, if the story is similar to what you see in Senegal. In Senegal, the population is roughly 16 million. The GDP is a lot lower than what you find in Ghana and Kenya. It's 23 billion with 2 million e-shoppers. Then there's a high internet penetration rate of 46%. Again, the story is consistent across Africa. It's not dependent on internet. That's the mobile money schemes. It's just dependent on you having a mobile phone, smart or dumb. There's 32% penetration for mobile money in Senegal, whilst credit cards account for just 2.8% of the payments methods, and debit cards 9.6%. That's very, very negligible. 20.3% of the population have bank accounts. Uh, as with most of Africa, when you talk of financial inclusion, beyond the banks, mobile money or the telcos provide this actually as an option to bank the unbanked. And this why you see the rapid growth is that a lot of people, a lot of the population in Africa, their first contact with anything financial or payment systems is through their mobile phones. It's quick and it's easy to understand because pretty much anyone, again, we can't beat the drum enough, can use a mobile phone. Digital payments made in the past year is 34.6%. 2.5% of e-shoppers bought something online. 10.4% paid for something online. I mean, this again can be attributable to bills payments. Similar story in Cameroon with 26 million people, a GDP of $38.8 billion, e-shoppers 1.5 million, internet penetration of 30%. As a matter of fact, you can I mean, you can discount the internet penetration when it comes to mobile money itself as a payment method. However, there's a lot of work being done across Africa to increase the internet penetration through different service providers. And what that means is a lot of commerce happening in Africa is happening on the mobile phone, right? So it's important to also note this simple facts. 15% of the populace have mobile money and it's growing rapidly. Credit cards and debit cards accounting for under 14% of payments in Cameroon. 26.8% of the populace have accounts in financial institutions, while digital payments accounted for 24.5% of everything that happened in Cameroon in the past year. Whilst only 3% bought items online, at least 6% paid for items online. It's important to note some of these simple facts so that when you're looking to expand into Africa, in terms of the population, in terms of the demographics, in terms of what works, and how they pay, or the first point of contact with the people in the various countries are with financial systems, it's good to note that cards, right, as opposed to what works in Europe and in the US or developed markets in Africa, it's skewed towards the mobile led technologies. In Senegal and Cameroon, the dominant mobile money schemes are operated by Orange and MTN. And then the card, again, are Visa and MasterCard. There are indigenous card schemes in all of these countries, but again, because the financial institutions are more affiliated with the Visa and MasterCard, that's why you find them cutting across. But one thing to note about Orange and MTN also is that they have an interesting partnership that allows for interoperability and simple, easy cross-border payment through a single API called Mowali. Senegal and Cameroon also belong to the same economic region, so you find they have very similar currencies, SOF and XOF and XAF. Again, just to reiterate, this the flow is consistent. So when you think of mobile money, if you are integrating in Kenya, you're integrating mobile money in Ghana, you're integrating mobile money in Senegal, uh, Tanzania, Cameroon, wherever, it's been standardized so that the customer's expectations, even the merchant's expectations in terms of introducing their customers to the way they can pay them is simple. It's the same thing across board, just different service providers. As in Kenya and Ghana, this flow in Senegal and Cameroon are similar. Provide your phone number, you get push notification, and then you authenticate with your secret code. This again builds confidence in the payment systems, and these funds are also insured and backed by the regulators in the various countries. That's it on what we offer in those 4 countries. Thank you.
Thanks, Adebiyi. So we have a couple of questions, but before we jump into the questions, just a reminder for any of you who might have any additional questions, you can just pop them in through the channel, the tool. So just to start with, and I think this is a question for you, Adebiyi. Somebody's asking what the situation of mobile money is in Nigeria.
In Nigeria, there's no mobile money. So yeah, I should point out I'm also based in Nigeria, Lagos, Nigeria. So in Nigeria, there's no mobile money. What there's no mobile money per se. What we have is wallet operators. I mean, they're called mobile money operators, but ideally what they offer is wallet, because the telcos up until 2 years ago weren't really playing in that space. However, recently there have been a number of regulations, there have been a number of initiatives being pushed by the financial systems regulator, the CBN, and the telco regulator, the NCC, to sort of collaborate and bring in the telcos into the financial services space. Essentially, the whole goal is to build financial inclusion. So today you have dominant players like Paga, OP offering wallet schemes, but with the with the intro of telcos into it through, I mean, there's Airtel, there's Glo joining that through what you call payment service banks, and we expect that these mobile money schemes would grow and take a life of their own. Again, what you've seen in across board, the trend has been that the moment people catch on to it, right, it's easier than going to a financial institution to open accounts. Almost everybody has a phone in rural areas where banks won't be able to provide services, or agents may not be readily able to go service clients. The telcos are there because everyone has a phone. So we expect it to grow in the coming years. It's in its nascent stages, but as it catches on and as more funds are being invested and the capabilities grow out, we'll see mobile money growing in Nigeria. Right now, there's still a lot of emphasis on bank-led payment methods, i.e. your cards, your bank accounts, transfers, and all of that.
Great, thanks. We've got another question asking about what mobile money method do you suggest starting with? Is it M-Pesa?
So M-Pesa itself really means mobile money. Pesa is money. It depends really on what country you want to launch in Africa. So we touch on 4 countries right now, and every country has its own scheme. It's mobile money everywhere. However, if you're looking to launch in Kenya, you have M-Pesa from Safaricom. If you're looking to launch in Cameroon, for instance, there's Orange. If you're looking to launch in Senegal, it's orange. So there are different telcos across this market. So it's really dependent on what market you want to launch in. And as your partners, we're able to tell you, based on our knowledge of those markets, which operators control what share of which operators control the larger share. You would have access to everything in those markets, but we're able to also say to you that, okay, in terms of these markets, this operator controls maybe 80% of the market, so maybe there should be some emphasis on them, but it's really dependent on whatever markets you want to launch in.
Great. Just to add to that observation, since we have a unified API and the integration is very similar for all the different mobile money methods, it's very easy to add other payment methods once you already are familiar with mobile money as a payment method using our API. So I've got another question, which is another question about Verve card. Will it expand out of Nigeria?
Oh yeah, sure. Verve is issued in about 13 countries today. So it would, again, in terms of strategic vision of the card scheme itself, I believe they have a roadmap to launch into more countries. But today, Verve is issued in in about 13 countries in Africa. Yes, Nigeria is their biggest market, their own base, but they are issued in Gambia, in Sierra Leone, in Kenya, and several other countries on the continent.
Great. We don't have any other questions. So if any of you have any particular questions that you might want to ask to either of us, you can definitely reach out and we'd be happy to help. So thanks everybody for participating in this webinar. We'll make this webinar available so you may access it through a link later on. Bye, and we'll stay in touch.
Thank you.
Thank you.
All right, bye-bye.